The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 18th Fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool coined by none other than Henry Ford himself. This tool is whether you think you can or not, you are right. Would it surprise you? No, I'm certain it wouldn't surprise you. But would it surprise you to learn that everything that you have in your life, everything that I have in my life right now, may be pretty much the way that we made it? Have you thought recently that from hundreds, thousands of options, each of us choose our responses to whatever the situations that present themselves? It happens in trading. It happens that way in everything in life. Would you agree that you've exercised the capacity to choose whatever it is that you've received in your life? If so, it doesn't stand to reason that if you made a choice in the first place, that you can change your mind and change the situation. If you don't like the way things are, all you've got to do is change. Life, folks, life is not at all chance. Life is mostly choice out there. Like Henry Ford said, whatever you think you can or not, you are right. Stay positive, folks. Let's go take a look at these markets out here. It is Fantastic Friday. Options expiration. Expect a high volatility, high volume day in the marketplace. If you are listening to us on your mobile device, maybe the radio, you can always catch an archive of this show on Channel 9. You can always watch it streaming live as well on your smartphone, smart tablet type device. Just go to the homepage of TFNN.com. On the very right-hand side, you'll see you'll see three phones. Click on that. You'll be able to stream this show live. Let's start off by taking a look at, let's go take a look at the S&P 500. Why don't we start by taking a look at the index, see what happened yesterday. So we'll go ahead and pull that chart up on the screen. It's probably just sitting here right in front of me. There we go. So we're going to switch over here. We're going to take a look at the S&P cash, closing out yesterday at 1480.94. So what it did was it absolutely took out an area of resistance. Now, that area of resistance really being anchored by that September 14th swing point. The high of that September 14th swing point, 1474.51. But if you draw a line, if you in all trading systems, all charting packages have line tools. You could also say you're looking at the October 5th high, which would be 1470.96. But when you break out above an area of resistance, old resistance becomes what? That's right. Old resistance becomes new support. So now, with regard to the bulls and the bears, the line clearly drawn in the sand because the bulls have taken charge here. They've gotten up over the resistance area. In the S&P cash, if you're looking at my chart, you're taking a look at on the bottom portion, you're looking at the relative strength index. It is not at the overbought area. It's pretty darn close. It's at a closing level yesterday of 67.40. Once you get to that 70% mark, you start moving into overbought conditions out here. If you take a look at the channel line, you can see that price here has been traveling right inside that channel line. The channel line was drawn yesterday, was drawn before yesterday. Pretty interesting how even the S&P tried to break above it, and where it closed was right at the top of that price channel line. Remember, when you're drawing channel lines, they're different than trend lines. You want to use co-located, as many co-located opens and closes. It doesn't matter whether it's an open or a close. The top here really being the top of the December 18th close. That's the 1446.79. The close on January 2nd out at 1462. The close of January 4th out at 1466. And then yesterday's close. So we can see that's a pretty good boundary line. If we take a look at, I didn't mean to draw that. If we take a look at A to B equals CD patterns that are out here in the S&P cash, you can see A to B coming off of the November 16th level. A 1-to-1 A to B. That's your low is November 16th. Your high, November 16th. Your high is the December 18th level. And then we had the market pull back into December 31st. A to B equals CD equals 1501.44. So if you are watching some of the shows on television, people are saying, the 1500 mark. Certainly that is a target here. You can just see just a 1-to-1 A to B equals CD would take you up there. You can also see that you've got an expansion of swing points, a butterfly expansion. It would set up a 1.272 butterfly. That's your expansion of your September 14th swing point high down to the low of November 16th. If you take your Fibonacci ruler and you expand it, that means you subtract the high of the 14th or the high of September 14th from the low of September 16th. Take that number, multiply that times 1.272, add that to the 1343.35. That is your low of November 16th. That'll give you a price projection of 1510. So the target area to the upside, 1501 to 1510, with the S&P closing at 1480.94. Now, do you need to chase things here? No, you got to take a look at. It depends what type of trader you are. There are a number of diverging charts that are out there. You've got the markets moving towards the upper end of that relative strength index. We'll take a look at the Russell 2000. We'll take a look at the New York Stock Exchange. Do I recommend chasing the market here? No. What you do is you wait for the market to pull back to give you the proper setup. Now, one thing that you can see here, if you're looking at the S&P cash, a real critical area here with regard to whether or not this is really a breakout is going to be the first test coming back. And it will test coming back. It'll come back and test at least the high of September 14th. And that high, again, is the 1474.51 level. So it's going to be key how that area gets tested. If, in fact, you close below it, if you close below September 14th, it would indicate that it's a false break topside. I would tell you, having a swing point so close to being underneath the September 14th high, and what I'm referring to is January 15th, until you break the low of 1463.76, it could just be more or less a complex A to B equals CD up. You get a close below 1463.76. It absolutely was a false break topside. So that is your setup on the S&P cash. If we go over and we take a look at the E-mini, let's go see how the E-mini is trading here. Actually, I think the first screen that's going to pop up on the screen here is going to be the Russell 2000. So what does the Russell 2000 do yesterday at about 2:30? Makes a 1.618 butterfly expansion pattern. That includes A to B equals CD. It includes expansions off of the swing point high that came in at 9 o'clock in the morning on January 10th up at the 882 level, all the way down to the lows that were put into 8 in the morning on January 15th. Made a 1.618 butterfly expansion. The market did what it was supposed to. You can see it was also making that expansion pattern, when it was in more or less that the extreme overbought territory. That was was getting up to a level of about 79, and so you're well above the 70 percentile range. And in order to work off an overbought condition, what must the market do? Absolutely. It's either going to pull back or it's going to move sideways. We can see here that the market was pulling back sideways, pulled back just slightly, moving sideways, went back up and tested the swing point at about 3 a.m. this morning. So it's just recharging, is ready to take its next leg up. Well, only time will tell. But what you would want to do, yesterday, if you were watching the move up in the marketplace and you said, I wanted to get on board. You don't want to get on board. You want to go down to an intraday chart. You want to see whether things are in overbought, oversold condition, and you want to wait for the market to pull back. You don't need to chase things. Use these types of tools, these types of setups, so that it puts the odds more on your favor as far as when to enter a marketplace. I'm going to go over, I'll teach you something here. This was something I put in yesterday's newsletter for my clients so they could understand where a likely breakout was to occur and if they wanted to take an intraday trade. And that was taking a look at the actual ES Mini daily chart. And the ES, I mentioned this during the show yesterday. I didn't actually show the pattern. I'm going to teach that to you right now and show it to you. And it's a rising 3 pattern. And what we're taking a look at is the actual candle from January 10th. And you can apply this, folks. You can apply this pattern to every chart. Doesn't matter what time frame it is that you are trading. And it will help you both from breaking out as well as breaking down. So if we take a look at that candle on January 10th, you had the ES Mini closing out at 1470, and it's those next candles. Take a look at these small bodies here. See how these small bodies traveling with inside the body of January 10th, never being able to actually break above it. And if you've got candles 2 through 6, it can be more than that, but really 2 through 6 are really your key candles, and you break above a wide-bodied candle, and that really qualifies as a wide-body candle, that January 10th. That tells you that is a continuation move. I speak about candles because what candlesticks do is they help you to interpret the message of the markets. And isn't that what we're always really trying to do, is understand what the message of the markets are? And you want to be able to open yourself up to new information because on a daily basis, on a continuous basis, the markets are always communicating to us. And then you take action. Well, in this case here, you can see the candle session on January 11th, small-bodied candle, pulls back a little bit more on the 14th as well as on the 15th. On the 16th, traveling inside there. This is a great, this is a textbook example. If I were writing the book, I would put this one in here because it's a textbook example of how you can use the rising 3 or the falling 3. In this case here was rising 3 as soon as you get above the close of January 10th. And aggressive traders would have put on a trade where as soon as it got to 1471, you could have put on a trade, and if it rejected that area, you'd close that trade out at the end of the trading session. But there was a breakout. We absolutely had a breakout. Of course, if we go over to the ETF structure here and we take a look at the SPYs, what the SPYs will tell us is that we had a rejection of a swing point. Where is it? And the rejection of the swing point was September 14th. And there was rejection on lighter volume. Now, the SPYs here, the reason why there's a difference between the S&P 500 and the SPYs, it just simply has to do with regard to dividends. So when we take a look at the SPYs here, the SPYs got up over September 14th. September 14th had 169 million shares, and if we take a look at yesterday, the SPY's only doing 133 million. Follow the index, but also, as I showed you yesterday when we took a look at the Russell 2000, make sure you're using those intraday futures contracts to make your trading decisions because you don't want to chase things when you are up towards the top of that relative strength indicator. It is Fantastic Friday, January 18th. Thanks so much for joining me, folks. 877-927-6648. That's our call-in number. Give me a call. We'd love to hear from you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures are relatively flat. The Dow futures up about 7 points right now. S&P up a full percentage point. NASDAQ futures pulling back a bit, down about 6. Russell 2000 totally flat. King dollar on the move. The King is up 32 ticks right now. You've got a pullback in the euro, down 62 ticks. The British pound is back about 0.5%. Same with the Canadian dollar. We'll take a look at the currency markets. We've got gold trading up $2.40 out at $16.93. Silver having a nice move this morning, up 29 cents right now. That's up almost a full percentage point, trading out at 32.11. Light sweet crude flat, out at $95. It wants to trade to 97. Platinum back $16, out at $16.84. Copper up 3 pennies, up 0.8%, out at $3.69. Natural gas up about 0.5%, almost up 2 pennies out here. Over across the pond, we've got the DAX trading lower. DAX is off by about 11 points right now. The FTSE having a good day, up another 0.6%, up 36 points right now. Over in Asia last night, the Nikkei taking out that island reversal pattern pattern that was out there. The Nikkei closing out at 10,913, up 303 points, up almost 3 percentage points. The Hang Seng also having a good day, up 262, as well as the Shanghai up 33 points, both of those being up over 1 full percentage point. Let's go to Brian in Jackson, Mississippi. Brian, thanks for calling. Thanks for holding. How are you today?
Great. Thanks for taking my call. I appreciate it.
Oh, my pleasure. Thank you for listening.
Thank you. Look, I was looking at taking a short position on Chevron CVX.
Okay.
And it looks like it formed a gravestone doji yesterday, and I was going to get your opinion on that.
In fact, it did. So good call there on the candle pattern. If we take a look at, let me see what it's trading at here right now, if I can do that here real quickly for us. And so we got, see, have you looked at it in the pre-market here?
It's, let's see, it's up slightly in the pre-market. Looks like it's going to open up around 15, maybe a little bit less.
Okay.
I mean, it's 1466 to 1529 is the bid and ask. So.
Got it. Okay. All right. So the reason I was asking, because boy, you'd love the trade setup on this. Would be nice if it were to gap down this morning and open somewhere below the 114.59, having that gravestone doji out there. So if we do take a look at patterns, let's go we're looking at Chevron, folks. It's CVX is the ticker symbol. Put the relative strength indicator up here. We can see it is up at the top of its range as well. So what the gravestone doji is doing, folks, and these dojis are really great candlesticks up near resistance areas. And when we talk about resistance areas on Chevron, we're taking a look at the gap down. We're taking a look at the open window that was established on October the 10th out there. A gap down with 15 million shares. Also, yesterday was going against the candle of October 17th that had 5.2 million shares. So he came in yesterday with 7 million shares. But what it's really going against, Brian, is that 15 million shares. So you've got everything you really want out here, with the exception of one thing, and that is a second confirmation, and that means trading today. So it is up at the top of its range. If we take a look at A to B equals C, so it's setting up everything. I just like a second opinion, and I think a second opinion is probably the most powerful thing that any trader could do out here. And so you've done a great job of identifying a trade. And just like if you were going to go to the doctor and they were going to give you, and your body was at risk, in this case here, your money is at risk, and what you'd like to do is just get that second opinion. Wait one more candle for confirmation. And part of the reason is if we take a look at the A to B equals CD pattern, we could see an additional spike, and it's really that C to D leg that is so critical. And we can take a look at price coming off of the C point, which is that December 31st area, and we can see that price has been moving on the inside path of that C to D leg. And what that means, Brian, it means that the move up and that C to D leg is more powerful than A to B. So you would expect it to find resistance near that open window. Now, if we're gapping down this morning, I would say go ahead and pull the trigger. It's very close to taking a short position, but I would wait to see how it trades. I would wait to see how it trades today, and I would wait for one more confirmation. And that just simply means you want to see a close below yesterday's close of 114.74. Does that help?
Okay. Yeah, it does. The body of today's candle, if it gets up inside this body, as long as it doesn't go over yesterday's close, it would still be and close below to yesterday's close. Does that make any sense? It would be probably a signal then, right? Yeah,
the Japanese term expression is that leaves are falling off of a tree, and that's the type of confirmation that you like to see. Now, your expectation should be that it ran into resistance, which it did yesterday. Now you're just looking for some additional follow through. If it closes above 115.36, it may want to go fill the gap, and your short is going to be up at the 117.35 level. All righty.
Thanks a lot, man. Appreciate it.
You bet. Thanks for calling. 877-927-6648. Would love to hear from you as well, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 16 points right now. Composite back 5. Small caps down about 25 cents. S&P basically flat, up 82 pennies right now. Google off 87 cents. Apple down $4, trading out at $498.73. We know we're going to go take a look at that. Microsoft down 14 cents. Intel off $1.30, missing their numbers last night. Cisco off a penny. Moving to the upside here, you've got Life Technologies, LIFE, is the ticker symbol, up 11% this morning. That's up $6 and change. Netflix on the move, up $3.84. That's up 4%. Amazon moving higher, up $1.88. That's 0.7%. Baidu up $1.37. That's a little over 1%. Wynn Resorts up 1.6%. You've got CF Industries up about $1.82, Rio Tinto up $1.42, Morgan Stanley out with earnings up $1.29. They're up 6%. We'll take a look at the XLF a little bit later, see what that is doing. To the downside, we've got Capital One. COF is the ticker symbol. In fact, that is the chart that I've got up on my screen. We're going to take a look at Capital One. We had a caller yesterday asking about Capital One, asking where an entry point was, and so we'll go take a look at that. You've got Apple again trading down about $4. Ben Franklin, BEN, it's actually Franklin Resources, off $2.85. Visa down $1.95. Finisar Corp, FNSR, off $1.41. Intel down $1.38, Google off $1.79, Ariad Pharmaceuticals off $1, Johnson Controls off $1.02. Again, our call number is always 877-927-6648. So let's go take a look at Capital One Finance. They were out with earnings yesterday, I believe, last evening after the bell. And when we were taking a look at possible areas of entry point, we were looking at the gap, the 1231 gap, and the gap down below that level this morning. The top of that gap is 57.95. So that window has now been closed. That should have acted as an area of support. It didn't. And what the Capital One has done, and there's this, I don't know what is behind this high volume bar, but it doesn't really matter. When you open up a chart, one of the first things you want your eyes to do is gravitate towards the high volume bars. You want to understand where they're at. When you're taking a look at getting into a position, you want to understand where they're at, because you want to be flanked by a good defense. And a good defense is a high volume bar out there, because that's where you've got institutional buying or selling. In this case here, when you see a high volume bar such as on September 5th with inside Capital One Finance, what you don't have with it is you don't have high price spread. And so you don't know how to interpret it. And your only interpretation, at least I don't know how to, my interpretation is, I do know how to interpret it. This is how I interpret it. I pay attention to where price is at. Does that area hold as a support level as price moves down in there? Do we have someone accumulating stock? Do we have a distribution of stock going on? And so it's very important to be watching that area. So on Capital One, it's very easy. And that is going to be the price level of anywhere between 55.40 to 56.20. 56.20 is the high of that September 5th candle. If we take a look at what price did this morning, it got down to 56.21. Now, volume so far, only been trading here for 7 minutes. We've got volume of 5 million shares. That 5 million shares is going to be going against the 35 million shares from September 5th. So with that type of volume, do you need to, you got an area of identified support. Do you need to take a trade on this today? I say no. I say you need to wait to see what the volume pattern characteristic is. You're coming into an actual swing point. The swing point would be, which it hasn't touched this morning, is actually the November 15th low, or high, I should say, of that bar, and the high is 55.80. So it has not tagged that area. I would say you want more information. In fact, I would say just put up the relative strength indicator. You can see it is not in oversold territory yet. The level that it's at from a percentage-wise standpoint so far this morning is at about 37.13. You can see here in November 15th, November 16th, it got down to that 29, so into that 30 level before it also bounced. You can see every time that on Capital One Finance, when the market moves down into or below that 30 level, that's where you see some type of market bounce. You know you're supposed to see a market bounce there just simply because it has to be able to work off that energy, and it does that by either moving higher or moving sideways. And so I think it's really easy to go take a look at the chart now and on Capital One Finance. So let's go take a look at some of these other stocks here that are moving, especially those that can help to move the markets. How about Intel? Intel gapping down this morning. Intel is going to be testing the resistance of none other than that January 2nd gap up. So we're going to draw a line across the bottom here so you can follow this. If you're watching on TigerTV, you can see that level, the gap up from January 2nd, was tested once. The low there is 2105, 47 million shares. Now, the first time down there was on January 8th, and it was 48 million shares. So 48 million shares going against that gap of 47 million shares. That is not the type of test. You like to see those areas being tested on lighter volume. You're going to have some good volume in it today. Already 33 million shares still trading inside the January 2nd level. This says to me that what Intel will do, Intel will close up this window, should close up this window. You can see yesterday Intel getting where? Getting above the overbought condition, getting up into a level of 73% out there. That is why you want to be paying attention. What you really want to do is you want to go ahead and map these indicators on your charts, and then you want to go back to the left. You want to go back to the left-hand side of the chart and take a look at each time as price got either up to the highs or to the lows, and you want to take a look at patterns, what typically happened out there, because you're just simply looking for stocks that have repeatable patterns. When you find repeatable patterns, it makes it much easier to trade. It helps you to eliminate some of the fear, some of the greed out there, helps you to take care of the greed, whether or not you should take profits off of the table. So use these indicators to your advantage, because it's always about being able to read the message of the markets. Maybe you haven't spent the time educating yourself on how to take a look at candle formations. Like Brian called, he clearly was taking a look at CVX. He knew it had formed a gravestone doji out there, and so just simply knowing that, he understands how to trade. And these candles are so powerful. And again, it helps to understand expectations. And expectations are, if we take a look at the market, we go back to CVX out here. If we take a look at CVX, you would expect as a market gets up into an area of resistance. In this case here, you had a downdraft. You had a downdraft with volume on January 10th inside Chevron out there. You had the area was tested with 5 million shares on October the 17th. No way was that going to be busting up the 15 million shares. Yesterday moving up with 6.9 million shares on a great day. So you should expect resistance up there. Now, all you're doing today to put the odds on your side is taking a look at getting some follow through. Getting that, if there's one tool that I would share with you that'll impact your trading, I've got plenty of them, that would impact your trading perhaps more than anything else in the entire world, and that's this. When you get ready to place a trade, when you know that you want to place a trade right here, right now, take a look at that time frame chart that you're on and wait one single bar. Let the market prove to you. It doesn't mean that the trade's going to work out, but let the market prove to you that you were right about the conclusion and about the reason behind why you just took the trade. That will save you and make you more money than anything else you humanly possibly can do. If you are a person that is very detailed and you go back and you take a look at your history of trades, which I would recommend that you do, and go apply that technique and see what happens. See how that would impact your trading. So that is the biggest gift that I could give anybody. That second opinion is so critical out there, and use that to your advantage. One of the problems with inside the Chevron trade, yes, we had a gravestone doji yesterday, but you also had a gap up, which hasn't been tested. So you know how we take a look at these gaps, and that's a tricky element of a market here that's going to pull back. So there's going to be areas where you're going to find normal areas of support. If you take a look at the candle on January 16th, the high was 114.33. Yesterday's low, 114.59. We've got a gap. We've got a 6-cent gap out there. Does 6 pennies mean a lot? Oh, my goodness, yes, it does. Absolutely. Any gap, any open window means a ton. So in the case of Brian here, not only would I really want to see it close below yesterday's close of 114.74, I want to see it actually close into the January 16th candle. I'd like to see it close at 114.32 at least, just to know that that window has been closed. That then sets up a move down to the next swing point here, which would be January 8th. So just like we took a look at the S&P cash, I think it's very easy to identify where the bulls and the bears are, whether there's a false break to the top side or not, because the swing point on the S&P cash is really tucked down low below that 1474 area. So that becomes so easy with regard to identifying whether or not the chart switches from bullish to a bias of a bearish out there. So use all these tools to your advantage. Let's go see what else is moving in the marketplace out here. So we had Capital One. We had CVX. How about GE? GE, we're going to take a look at GE for sure. GE out with earnings, beating by a penny on the bottom line. Of course, GE, what it's doing here today is coming up and testing its most recent swing point. Also, if you take a look at the GE is struggling, and we're going to spend a little time here on the GE chart because, as you know, GE is really a bellwether as to what's going to go on inside the Dow. And I don't really care what happened. I do care what happened yesterday, so I shouldn't say that. But until the divergences change, and they have not changed, folks, there is something sinister going on. Yes, there were breakouts, and yes, there's euphoria, but when I take a look at all the divergent charts that are out there, and these are silent signals, absolute silent signals that you need to make sure are a part of your trading platform out here, GE being one of them. So if we take a look at GE struggling as it tries to move up into the downdraft. Volume today, really good. You got good volume inside GE today. Let me get the line here on the chart. The volume so far in just the first 15 minutes of trading is 26 million shares. And that 26 million shares pushing into the downdraft of 107 million shares from October 19th. But what we can see here is GE is really setting up an area of resistance. This is an area here. I'm going to move the line up just a little bit here. This is an area of resistance that is setting itself up here, and this is going to be tested several times. It was tested on the 12. Great concert out there. With 42 million shares, the upside at 21.95 was tested and rejected on the 13th of December. It was tested again on December the 17th. It's being tested today and selling off. So this level right at about the 21.95 is really a strong resistance area for General Electric. Now, what I'm going to do here is I'm going to go ahead and overlay the Dow on the chart here. So let's go and overlay the Dow Jones. Give me 1 second here to do it. And DU, we want to go ahead and we're going to put it not in a sub window. We're going to put it right on the chart, and I'll make the line here a little bit a little bit thicker. So we're going to take a look at the Dow. So the red line now that you're looking at inside this chart here, the overlay of the Dow. What we can see here, if you go back to swing points, which clearly is back into the September time frame, the October 5th swing point, you can see that the Dow is up at its highs. If we take a look at the same thing for GE, and you come back to the swing point here from October 5th, what you are seeing here, I'm just going to draw a diagonal line. We'll just change that to a blackout here. What you can see is GE is not participating in that move, and that is really critical, because what GE does, it gives you a great indication as to where the Dow wants to go, and it wants to correct. Does it have to be today? No, but the Dow wants to correct. And if we go and take a look at the actual GE correlation chart, and I'll go ahead and put this in. What you're seeing here are just some of the correlation charts that I take a look at, and these are hidden signals. These are absolute hidden signals that most people don't use, or what they should use. Absolutely, you can see any time that you've got a divergence between the direction of GE and the Dow, and specifically here to the downside, where you've got GE traveling down and the Dow moving up. That has led to corrections, sometimes really significant corrections out there, and you just simply have to, once the correction starts, you then go ahead and use normal trading tactics, whether it happens to be Fibonacci retracements or tests of swing points or A to B equals CD patterns. But even still, if I go ahead and adjust, because we do have a little bit of a movement here yesterday, so I'll go ahead and adjust the line. We still have GE moving to the downside with the Dow moving to the upside, and that is a divergent pattern, folks, that has always led to corrections in the marketplace out there. Let's go take a look at the currency market. Let's go start off with the King. Let's take a look at King Dollar. You've got the U.S. dollar index. This is a daily chart of the U.S. dollar index. Now, the red diagonal line that you're looking at on my chart, first you can see a couple of different A to B equals CD patterns here. So, the U.S. dollar index making those. I'm going to go ahead and pull those off of my chart just to make it a little bit easier for you to take a look at. And as we take a look at trend lines here, we're taking a look at the trend line in the U.S. dollar index coming off of the July 24th high. That level is 84.25. Your next point of target here is going to be the high of November 16th. Would make sense, right? 81.51. We can see that the U.S. dollar index did break above it. Broke above that area, actually peaked its head above on January the 3rd out there. You had some additional follow-through on January 4th. Like you do with any channel line or trend line, you come back and you test it. This was tested for a couple trading sessions on the 7th and 8th, rejected that area on the 9th, and boom, came through it with a vengeance on January 10th. So you're back inside the lower part of that range. What the King is trying to do, the King is trying to break out of this trend line that it is back into. If it can't break out, it'll come back all the way down and test that hammer low from December 19th, and that will move the markets higher so that the S&P can get up to that 1,500 level. 877-927-6648. Pretty flat market. Dow's up 6. S&P's down 65 cents. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
folks. Dow up 8 points right now. Composite off 5. We are going to go take a look at Apple. Small caps up $1.30. Let's first take a quick peek here at the Euro-US dollar currency pair. If you're watching us on Tiger TV, we're taking a look at really 3 horizontal black lines on the chart. Those are setting up areas of normal resistance, tested areas of resistance. The first one that the euro broke out of was the resistance area set back by the cluster of candles right in the April 2012 time frame. Broke through it, came through with some conviction on January 10th with a real wide-ranging bar as it came up into that resistance area. In this is where candlestick charting is really key. You don't get volumes. There's no way to get volume on the currency, and so you really have to rely on candlestick charting in order to be able to understand the message of the market. So as you're coming into a resistance area with a wide-ranging bar, that's telling you you've got some energy. And sure enough, it was able to break above that first level and trade where? Right into the second level. The second level was a cluster of candles from March of 2012 and was also an area where you had the swing point low of February 24th, 2012. That set up the next area of resistance out there. So it becomes easy to identify where a market is going to move to. Now, what the euro did do was it created a bearish engulfing candle on January 15th that sort of was erased here yesterday. Of course, it's coming back into play. I've got a diagonal line, a couple small diagonal red lines out here, which really represents a potential little flag opportunity. And if that is the case, if this turns out to be a bullish flag, then I can tell you where the euro would actually pop to. And what you would do, folks, I'll go ahead and you can do the math on it. I'm actually just going to draw a pattern in here by simply coming from the top of the flagpole down to the bottom of the flagpole. That's this little highlighted area that you're looking at. Let me shorten up my chart. And if the euro is going to break, it's first going to run into resistance here at the highs of December the 27th out there. That's going to be the 134 level. But what you will see is you will see as I move this up here, you'll see it'll travel much higher than that, because if this is a bullish flag, then you will see the euro move up to about the 138 level. Now, what's interesting about that, if we pull this chart back here, you will see at 138, it is nothing more than the 618 retracement off of the highs from May 4th, 2011, all the way down to lows that were put in on July 25th, 2012. So right now, it actually looks like, because of this setup here, because that is a bullish setup, that is where the euro wants to trade to. If the euro does move higher, that will go ahead and put some energy into our marketplace as well. Now let's go take a look at Apple, see what Apple is doing. It's down only $2.61 right now. Let's go see what that is going after here. Just imagine, we've been on the air here for almost an hour and hadn't taken a look at Apple. How about that? Apple going into the most recent swing point low. That is the area of January the 15th, 31 million shares. The high is 498.99. Volume so far today is 5 million shares, 5 million going into 31. Let's go put this on a intraday time chart here. Let's put this on a 5-minute chart and see what we've got out here. Let me refresh my screen. And what you can see, and it works just like clockwork, folks, you can see here Apple moving down, getting into where? Getting into that extreme oversold territory. In fact, if we put the actual number on it, and it getting down to a level of 24 and reversing off of that. It has to work that level off. Doesn't mean it won't go lower, but it helps you to understand where the markets are moving and why they are moving. So, folks, it is Fantastic Friday. Thanks so much for joining me. If you're off to start your weekend, have a fantastic weekend. Remember, the markets are closed on Monday, so we'll be back with you on Tuesday morning. If you're staying with us, stay tuned, because it is Daryl Martin and myself doing the Nadex Bull Bear Binary Option Hour, and then that's going to be followed up by Basil Chapman, and then Daryl Martin for a full hour, David White, Ken Shreve, and the Tom O'Brien Show. Have a great weekend, folks, a great day. Look forward to seeing you soon. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.